Good day, Zach Nick, SantaClarita.com. Today I'd like to talk about what happens once you've been denied a loan modification. You've been going through this process long enough with your bank or servicer or the investor for the bank or servicer, and you've exhausted your resources. You have tried for the HARP 2.0, the HAMP, making homes affordable, or perhaps even an in-house solution with that particular servicer. And it's a no-go. They're not going to approve you. So now what? Many people get frustrated with the process because it's a long, grueling process in general. You've repeatedly been asked for updated pay stubs and bank statements and tax returns, and maybe you've even been asked this over and over, the same things, because sometimes the banks can't keep track of the paperwork. So it can be very frustrating, and at the end of it, you perhaps are frustrated and you're just like, you know what, screw it, we're just going to let this go to foreclosure. That is probably the worst case scenario for you financially, and as far as your credit can be affected, that can take the longest time to recover from. At the end of the day, a short sale is probably always going to be your best option, in the sense that it's less detrimental to your credit. Right now, most banks are paying the homeowner as much as $30,000 to complete a short sale. So it could be better for you financially to get some money into your pocket rather than just dragging the process out, having to be kicked out of your home. Even in the foreclosure, this becomes public record. It's often, printed in the newspaper, websites, stuff like that. So for those trying to keep this kind of out of the public eye, that is obviously a pretty negative effect in itself. Again, these banks, Chase, Wells Fargo, Bank of America, we actually have history with getting money from them to the homeowners, usually as little as $2,500, but we personally have seen as high as $16,000, and some banks like Chase are, we've heard of people getting as much as 30, and they say that they'll pay up to 30. We haven't seen anything that high personally. We've heard of it even in Santa Clarita here, but like I said, the most we've gotten is 16. We've had a 13. We've had some other double-digit ones as well. So there are a lot of options out there, and in fact, short selling your home could actually be less adverse effect on your credit than even a loan modification, because as you're going through the loan modification, you probably have stopped making your payments. That's when the evil effects start happening, because obviously you're getting 30, 60, 90s hit against your credit, but also once the bank submits, basically sends you to foreclosure, even though it doesn't go to foreclosure, that can show up on your credit report down the road as an actual foreclosure. So that could be a problem too. So if you are in a situation, obviously talk to a professional like your CPA or tax attorney and find out what the ramifications are to you, but sit down with a realtor as well and go over all scenarios before you make a decision, so you know exactly how it's going to affect you. If you weren't late on a payment, you could still short sell your home. You're not having the dings against your credit. It's not going to be sent to foreclosure. Money back from the bank is the end result, kind of like a bonus. So like I said, just talk to a professional. If you have any questions, of course, we're always here to help. You can email us sherry.zach@gmail.com. Of course, you can call us 661-262-9224. Thank you so much for watching, guys. Have a great day.